Headline profits can catch the eye, but sometimes they distract us from the real story. FGEN's 2025 results are a case in point. At first glance, profits surged, helped by the high-profile sale of 60% of its gas business. It's an easy win for the top line. But look closer, and a different narrative emerges. One centered on Energy Development Corporation, EDC, FGEN's renewable powerhouse. EDC isn't just another asset in the portfolio. It's where nearly 9 out of every $10 of FGEN's electricity revenue came from in 2025, and it carries the weight of the company's clean energy ambitions. With the gas stake sold down, EDC now makes up the bulk of FGEN's reported generation business. Yet, despite a 5% rise in revenues to nearly 49 billion pesos, EDC's profit dropped sharply, down 20% to 7.4 billion pesos. That's a red flag for any investor. Growth at the top line, but a steeper decline at the bottom? It signals that each new peso earned is costing more, generating less profit, or coming with greater risk. The causes are complex: higher spending on operations and maintenance, costly geothermal drilling to keep the resource base healthy, accelerating depreciation from new projects, and rising interest expenses as EDC borrows to expand. Meanwhile, softer merchant power prices and plant outages trimmed the quality of EDC's sales. None of these issues is fatal on its own. Together, they suggest a worrying trend. EDC is becoming more expensive to run, and perhaps harder to scale profitably. The business is still growing, but profitability is deteriorating, and that calls into question the durability of its competitive edge. For FGEN's shareholders, this matters more than ever. With the gas business now largely off the main stage, EDC is under a fiercer spotlight. If its growth comes at the expense of margins and cash flow, the company's valuation may need to adjust. But context matters. Some of this profit squeeze reflects the pains of expansion. New projects are live, but haven't hit their stride. EDC remains a formidable platform, with a renewable portfolio hard for rivals to match. The critical investment question is whether 2025 was a one-off transition year, or the start of a tougher, lower-margin reality. In the end, headline results can dazzle, but long-term value comes from a business that balances growth with profitability. For now, FGEN's jewel still shines, but in 2025, investors have more reason than ever to scrutinize it closely and to judge the promise of clean energy by the quality of its results.